Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index gained 0.7% last week, its strongest weekly rise since mid-June, closing near 101.45. The move was driven mainly by higher oil prices, which revived inflation concerns and strengthened expectations of further Federal Reserve tightening. With the US economy seen as more resilient to an energy shock than Europe or Japan, the dollar continues to hold a relative advantage. WTI crude opened more than 6% lower on Monday at around $82.85 as tensions in the Middle East showed signs of easing. President Trump left room for diplomacy with Iran, while Tehran paused retaliatory strikes against US allies. Oil remains highly sensitive to geopolitical headlines, with markets now focused on shipping through the Strait of Hormuz and whether negotiations can produce a credible diplomatic breakthrough. Spot gold traded just below $4,100 on Monday, supported by bargain buying ahead of this week's Federal Reserve decision. Gold briefly rebounded from $4,000 to around $4,166 last week, but failed to hold the gains, closing below its 20-day moving average. A strong dollar and elevated treasury yields remain key headwinds, while mixed technical signals reflect continued uncertainty over rates and Middle East tensions. Policy pressure around the yen is intensifying, but verbal intervention is losing its impact. Japan has again warned that it is prepared to act, while the US Treasury has urged the Bank of Japan to raise rates. However, markets have fully priced out a rate hike at the next BOJ meeting. With rising oil prices hurting Japan's trade position, the yen remains highly vulnerable without stronger monetary policy support. The European Central Bank kept rates unchanged last week while leaving open the possibility of a September increase. However, its relatively cautious message failed to support the euro. Markets now price a roughly 71% chance of a September hike, but buying interest remains limited. Europe is more exposed to higher energy costs than the United States, while the ECB is still viewed as moving too slowly to counter inflation.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.